Hello and welcome to the Leaky Bucket podcast. I'm your host, Ian Morgan, and I'm here to make accounting fun and practical. With over 15 years of experience as an accountant and a business owner, I'm excited to share tips and tricks that will help you improve your financial controls and gain the clarity that you need to succeed. So let's plug those financial leaks and take your business to the next level. Stay tuned for some great insights. Hey guys, welcome back. I am here today to talk you through the 5 to 10 things that as a business owner you should be looking out for when you are requesting your management accounts that are clear and easy to understand. Okay, so let's get started. Right, number 1 is you need accuracy and timeliness. Right now, management accounts that are completely inaccurate are just a waste of your time and they're a waste of your money. If they aren't up to date and accurate and give you a clear picture of where things are at, what's the point in looking at them? Because the whole point of these, are that you're going to make better business decisions because you're more informed. If that data isn't accurate and up to date, then what are you doing? What are you making your decisions based upon? Right? Then we've got the point of like, when do you actually get the data, right? If you're having monthly management reports and you don't get them until 6 weeks later, like you've already done the next month, you need to be getting management reports by around about the 15th of the month. That should give plenty of time for your accountants or your accounting team to be able to close down the books, prep everything, get it all ready, and then provide you with a clear report for you to work on. Okay. Number 2 is the cash flow statements. So you need to be able to understand the cash flows in your business. So when you're popping into your reporting software, right? So if you're using something like Xero or QuickBooks or something, and you pop in and you run a profit and loss report, all of that data is based off the fact that it's the invoice date. Okay, so you may or may not yet have paid or received money for the invoices that are in that report. The cash flow statement shows what has been coming in and out of the business in terms of actual cash, right? So you do need something that's really clear that shows you exactly what's been happening. Like how much cash have you collected, where have you collected it from, how much cash have you spent out, where have you spent it, okay? So that's going to be really clear, and it can show you what the cash flow trends are for the business over the previous months. Number 3 is the profit and loss account. Now, already mentioned this, right? But the profit and loss account obviously shows you income and expenses based on the actual timing of when the invoices were dated, right? But it does help you understand the revenue, the expenses, the profit margins that you're generating. Ideally, you want it broken down into different revenue streams because you want to be able to see like which different things are bringing in the right areas, which bits where the trends are, right? And then you also want to be able to see the associated costs back to those as well, right? But you need to be able to see all of those key revenue streams, all of the costs, and then also broken down into the key admin and overhead expenses as well. Right, then we've got key performance indicators, or KPIs. Now, KPIs is just a fancy word for key bits of information that tell you about the financial health or the operational performance of your business. Okay, and it's fancy, but you probably know some of these already. Things like gross profit, right? That's a KPI technically, right? You've also then got other deeper ones you can go into, like what's your customer acquisition cost? i.e. how much does it cost you to acquire a new customer, right? You may want to know the difference between your operating profit and your net profit, right? By moving things below the operating profit line that aren't standard business performance costs. You know, things like you having a company car going through the business that's leased, right? It's not necessarily essential for the business. So you want that maybe to get below that operational profit line. key performance indicators. My big tip here is don't try and do too many too soon. Most people come in and they go, they've got this massive list, right? And you've got like 20. And then measuring all of those and monitoring all of those is really, really difficult. So I suggest build yourself up to 5 over a couple of months, adding a few in, watching what they do over a period of time and what that can tell you. And think about what do you want to know? What are you trying to achieve? Which area of the business are you trying to focus on? Is it sales and it's based on like new customers and retention? Is it something to do with your costs and your margins that you're making, maybe on different lines of products or services? Like really, really know that. Number 5 is the trend analysis, right? Management reports that just show you the current month don't really tell you anything. Right? Because you could have that, you could have the current report, and you go, yay, we made £10,000. But is it yay? Compared to what? Last month you may have made nothing, so yay. Right? But last month you may have made £100,000. In which case £10,000 not great. So you need to be able to see the current period, and I suggest month-on-month data going back for a year. Because then what you can do is you can look at that data and you can see the growth or I suppose dip, the growths and the dips, right? The peaks, the troughs, and all of those patterns. You can see them. You can highlight any potential red flags, and then you can decide potentially what to do about it. Okay? So the trend is your friend. Right. Then you have got number 6, which is the variance analysis. Now, this is all about having a budget and then being able to report back versus that budget where you were at, right? And now I know everyone's like, a budget, but a budget is really, really important. At the start of each financial year, you should be working out a strategic plan, right? Which is working out where you're at now, where you would like to be, and then like the actions that you're going to take in order to get there. And then a budget that is built around that plan. Then, as you're going through the year, you should be able to not only monitor like your performance over time against itself, but you can also measure your performance versus your budget to see if you're on track with where you're trying to get to, right? It then helps you to correct the course when you go off course, right? You can go, hang on, sales have dipped. Right, what do we need to do now, next month, in order to get ourselves back on track and get to where we want to be, or where we planned we want to be? Number 7 is then segmental reporting. So if your business operates in different areas or different products, or it's got different service lines, then you need to be able to see how each of these is performing, right? I've had this with a client before who they were in a cleaning business, right? And they did residential cleans, and they did end of tenancy cleans, and they did business cleans, right? And actually what we realized by splitting into these various departments and running them out is the end of tenancy cleans were losing the money, right? It wasn't worth it. Like, and I'm not even talking losing money like overall once you're taking admin costs. Literally, money generated less the cost of delivering those services was a gross loss. So actually, by ripping out that part of the business, which was a few £100,000, the business generated more money, even though it got smaller. Now, like, if you can find things like that by having management reports, like that's an awesome find. And you can make real key improved decisions within your business in order to move forward. Number 8 is balance sheet clarity. Now, a balance sheet, a lot of business owners don't understand. And what it is a sheet or a snapshot of what your position is at this moment in time. It shows your assets, things like, computer equipment, vehicles, those sorts of things, versus liabilities, like who you owe money to, and your equity. And it shows the overall financial position of the business. You want to see that net assets, the final net assets position of the business is growing over a period of time. You also want to make sure that you can see any key changes within that, okay? Directors' loan accounts, are they becoming overdrawn and you're taking too much money out of the business? Can you see that your assets are dwindling and actually you're going to need to reinvest in those at some point in the future? What are your cash balances looking like? Number 9, we have got forecasts and projections. So a well done projection helps you anticipate your future needs, whether that's going to be cash flow, investments, staffing. So off the back of your management reporting that goes back over a period of time and where you can see the trends of how things have gone, that much gives you a much improved chance and opportunity of you being able to predict what the future may look like. Now, I never suggest going like really, really far into the future. Like once you start going beyond 3 months, the accuracy of what you're being able to predict at falls significantly. But you should be doing it, particularly relating to cash. Right? And now last, at number 10, but not least by any stretch at all, is that this needs to be in a clear, user-friendly format, right? If what you're getting is, say you've got the profit and loss account, you've got the cash flow statement, and then you've got your balance sheet. If you're getting all of that information all just as numbers, oh my God, even me as an accountant, right? That is difficult to read, right? They can all just sort of haze and gloss into one, right? So what you need is clear graphs and visual data that you can see where those trends are, right? If you've got a chart that shows you your income versus your expenses over the last 12 months, right? You can easily see where the dips are, where the jumps are. Then you can go back and review and go, what did we do and where did that, what was good, what was bad? The explanation as well, right? There should not be any jargon or anything that you don't understand. Therefore, your accounting team need to be able to deliver that to you in such a way that they know you and understand you and what you're going to understand, right? If that means that if you're really, really clued up on your financial terms, great, they can deliver at that level, right? But if you're not and you need it simplified, like, that's not a problem. Ask, communicate that, let them know that you don't understand, because these are your numbers, right? And they're important for you to be able to go where you want to go with. Okay? So let me just rerun through that real quick, right? Which is, you need up-to-date, accurate, and timely information. They must include a cash flow statement. They must include a profit and loss account. You must include your key performance indicators, or your KPIs. You must be looking at the trend analysis, which is over a period of time, so it needs to go back over ideally the last 12 months. You also need a variance, so that's the performance versus the budget. Okay. You also need segmental reporting, so different areas, different products, different service lines. Okay. You then also need the balance sheet, and you need clarity over where that's performing. You also need forecasts and projections. And then finally, you need it all in a super user-friendly format. I hope that's all been helpful, and maybe go away and see what you can do to improve your management accounts. Thanks so much for taking the time to join us for this episode today. We will continue to bring you great tips and tricks in future episodes. But if you can't wait until then you can always head over to our Facebook group and join the conversation with fellow business owners and entrepreneurs. Just search Accounting Tips and Tricks on Facebook or check out the show notes. Until next time.